Good morning, traders, investors, and not forgetting you degenerates. And I say not forgetting because it's important that we talk to everybody, or I talk to everybody, and because I think when we start out speculating, I think we all start off in the degenerate mode, right? We our emotions run wild. We get excited by the pumps. We get distraught by the dumps, and it's something everyone has to go through to become a successful investor, I believe. And I think it's a transition thing. You start off as a gambler, and can you survive the gambling phase, which may last 1 year, 2 years, or even 5 years, right? And for everyone, it will be different. Everyone has a different experience set. Everyone has a different understanding of markets going into this business. And but it's a phase that we all have to go through. We have to pay our dues, to Mr. Market, and Mr. Market is a tough teacher, tough teacher sometimes, all the time, even to seasoned investors and traders. He can still teach them a lesson once in a while. So I think everyone starts off as a degenerate. We really don't know what we're doing, so we're just throwing market money at the market, buying whatever the hot latest tip is, just going along, only long, right? Never taking profits, doubling down when you shouldn't be doubling down, using capital that you really haven't got, too much leverage, etc., etc. You know all the stuff. And then I think if that hasn't shaken you out or wiped out your bank account and you're still in the game, then I think you become a little bit more cuter. Maybe become a swing trader. You start to realize that you don't need to be exposed all the time, right? You don't need to be exposed all the time, because then if all your capital is deployed at all times, then you can't really pick up the dips, or if all your capital is deployed into one little basket, then you miss out on other baskets that may be hatching little chickens, right? Um, but I think the easiest thing is to start off as an investor first. First is saver, grow your capital or save up your capital, and the majority of your portfolio should be long-term investments, and then you can add the trading aspect on the side, right? With speculative throwaway money. That would be the ideal way to go, right? You don't start off as being a trader. I think that's the wrong way to do things. I'm not sure if this gets publicized too much, but that would be, if I could redo my investment career, that's the way I would done things. Um, yeah, because I missed out on long stock market bulls. I missed out on great ideas. I knew that would work, like Amazon, Facebook. I knew, but I didn't have the capital because I was too busy gambling, right? And get my accounts blown up, etc. So, yeah, that would be my advice to everyone getting into the markets. Be a long-term investor first. Generate your own ideas. Key. Don't listen to anyone else, and start just reading the financial press. Um, Zero Hedge, I guess, is the new financial press, blogs, etc. But I guess even before that, you have to read books. Really get in the mindset of these old guys who've been around, who've been successful for decades and decades and decades, right? I think that will be your foundation. You need a foundation of knowledge before you start throwing money at the markets. Okay, that's my little soliloquy on investing, trading, and gambling. But let's look at Bitcoin. So I just published a chart on TradingView, and it is basically showing the Bitcoin bull of 2017. And the Bitcoin bull of 2017 had this little interesting pattern I just picked up, right? A big spike up, May 29th. This could have been the first of the China FUD. We had a big dip down, but the momentum was still on the positive side. Let's bring this up. Yeah, still on the positive side. But what was the dip? It was 3,000 back down to, I think it was around 1,000. It was a 60% haircut, I believe. Or maybe it was like 1,200. So the 1,200 was basically a test of old highs, right? Maybe like, I can't draw, let's see the candle charts, but it was big. It was a big dip. So this shows up in the momentum. But we had a rebound and then another dip. But this dip wasn't as bad. It was 5 to 3, I believe. 5 to 3. And again, momentum never went negative. So it was telling you this still is a bull market, right? And this period, when the momentum peaked over here, to this period where it went green again, when the momentum went positive, this price action, you got the price breakout above the old highs. And then we had the run up, October, November, December, 2 months of fantastic action. And you could have been flooded out of the market. You could have missed from 5 to 20, the meat of the move in 2 months. And so it's interesting when I saw this pattern, it just kind of reminded me of exactly that, because the momentum never went that high. It peaked here. And where was that price peak? It was around 35.40. This was when Elon, I think, did his thing, right? No, this is when Elon was pumping Dodge. This is when Elon announced he bought Bitcoin, not Dodge. So, and then this was what was this run up? 54, maybe it hit 55. Again, we've been fading since then, essentially. So all this price action going up has been on the fade against the momentum. It's been rolling over. And we're coming back down to, looks like, the 18-week average. Maybe, possibly. Did we do it over here? Kind of tagged it there, but not on the second time. So it's slightly different, but it's similar, right? So how many more weeks of pain is there going to be? And is this the final push down, throwdown? Was it Friday? Yeah. So Wall Street Money likes to make the most amount of money during the week when it's open. It's not on the weekend, because 3 o'clock New York time, they'll be hitting the martini bars if they are open now. I'm not too sure what's going on in New York. Haven't been keeping up. Don't really care, to be honest. So here we are. Is it 19 weeks pattern going to play out? Or is it going to be 18 weeks? Because now I've brought it to people's attention. And maybe my charts will provoke some minds. So here we go. 2, 4, 6, 8, 10, 12. Okay, I have to start again. Sorry. 2, 4, 6, 8, 10, 12, 14, 15. We're already 15 weeks in. Already 15 weeks of correction on the momentum. Not on the price, but on this. So this price run up was tired, essentially. So it's a reset moment. And this is financial reset season, right? So, okay. Next week is 26. I think over the weekend, we will find the answer. Because look how high this momentum is. It's still good. It's still bull season, right? Until it crosses down below here, and this is on the weekly chart, we are still good. So, yeah. It's going to be interesting to see what happens when traders in New York open up. And I'm not too sure what the low of the day was. Shall we find out? Let's find out. Candle chart. Well, it went down to 47.50 already, and so we're now at 429,200. Interesting. So 9 o'clock London time. I wasn't at my computer. Let's have a look. So there's always been some nibbling, more than nibbling, because it's up $2,000 almost, right? Let's do Hikins. Let's do a 4 hour. I wasn't planning on doing a video on Bitcoin today, but this price action deserves it, right? I don't want to leave you guys hanging. So we got some divergence. Yeah. Is it max pain out there? What's the Bitcoin sentiment indicator? I never really look at that, but and I'm not on Twitter, so I don't know what's going on in the Twitter world and crypto Twitter. But yeah, we're already 49321. And so it's only really the leverage guys who may be feeling pain, right? Well, it should be feeling pain, but they may be making money on the downside as well. So remember, it's a two-way market. People can go bet up and bet down. So at some point, you got to give the shorts, the bears, their day, right? But that their day is always going to be less days than the bulls in the bull market season, right? Bull season. So how deep is this been? Quite deep. It's the most since March, right? So that's important to know. Because throughout all this action, there was dips, but didn't feel like pain. There's still like DeFi stuff popping up, and Pancake, all that other stuff going on. So NFTs, etc. So maybe this is like when all that rubbish gets cleared out. Maybe, possibly. Who knows? Yeah, I'm going to call it there. We'll talk about some of my gold play dividend I found yesterday. That's really interesting. I'll do some digging right now and make a video. All right, guys, I'm going to call it. Stay safe out there, and remember, where are we in relation to the old bull, right? And where are we going? We're going to 100,000. I'm still positive, completely positive. Okay. Thank you guys. Thanks for watching. Talk to you soon. Bye.